Second one, madam, as I told earlier, today up to 4 o'clock I will take the class, and tomorrow up to 5:30, day after tomorrow up to 5:30. This 1 hour I will compensate tomorrow and the day after tomorrow.
Okay, no problem, sir.
Tomorrow all people are interested up to 6 o'clock also I will complete.
Okay, sir.
Okay.
Can be done as per your convenience and participant convenience.
Madam?
Yes, sir, it can be done according to your and participant convenience.
Your voice is breaking. My voice clarity is there.
Yes, sir, your voice is clear.
So PPT is moving.
Yes, sir.
Okay. So now I will discuss, I will start the class. Up to 4 o'clock, I will take the class. After that, I will complete whatever the leftover 1 hour is there. Tomorrow, half an hour, and the day after tomorrow, half an hour, I will complete the same. Because tomorrow, day after tomorrow, up to Friday, my classes are there. So, good afternoon to all the professors. As you know, my name and the designation, all these things.
Sir, excuse me, sir. This is Manjula. Your 15th and 16th classes are not there, no?
Madam?
15th and 16th classes are not there, no? Again, 17th only, no?
That I don't know, madam.
Because we are having, I saw 11th, 12th, 13th, 14th, then 17th. That is what they have given us. In the brochure.
Okay. I will check up. I will check up that one. Okay, madam. Accordingly, whatever the decision is there, accordingly we will follow. Okay, madam.
Okay, sir. Thank you.
So, good afternoon to all, sirs and madam. Today, I will discuss how to prepare the provisional financial statement as of CIRP commencement date. While handling this CIRP cases or liquidation cases, lot of challenges are there for the insolvency profession. Corporate data is not cooperating. The staff of the corporate data may not cooperate, and the books of the corporate data is not available, and most of the books are incomplete, and some books 2 years back it was completed. Audited balance sheets are not available, and if at all the IRP or RP requested the corporate data, he may not give adequate support or cooperation. At the same time, the staff members of the corporate data, sometimes they may not cooperate with us. And we are the foreign body in that particular environment. Because we have not worked earlier in that particular organization, and we are the foreign body. Once a foreign body means automatically a lot of rejections will come. Rejections means non-cooperation. And if at all I told something, then whether that is useful to my proprietor or director or whoever is there, all these things are challenges to the IRP or RP, sometimes in case of liquidation also. But one thing, whenever I am going to handle the particular case, what is the total assets? What is the total liabilities? Whatever the assets mentioned in the balance sheet, whether physically available or not. Some of the people, once the company is in a financial crisis, slowly they will remove all the important assets, and the assets will disappear, and even stock also disappear. And in this case, how to prepare a provisional financial statement? That too, as per the regulations, we have to prepare the provisional financial statement as on CIRP commencement date. Once CIRP commencement date, if you prepare the assets and liabilities, then accordingly your journey will start. Otherwise, your journey may not start. Why? Because if assets are there, then whether the company is going concern or not, or in case of liquidation, the assets are to be sold and that is to be appropriated to the financial creditor or operational creditor. So the provisional figures are required. The provisional figures are very, very important. So, but here you have to prepare as per the regulation. You have to means with the help of a supporting staff. How to prepare? Staff is not cooperating, corporator is not cooperating, books are not available. But today, in most of the organizations, that IT systems are there, information technology system, that is computer systems are there. Bigger companies or moderate companies also, they are using the IT systems widely and physical records are not available. So once you are appointed as an IRP or RP, first of all, you check up with the systems administrator, who is the head of the computer division of the company. Because the total data is in computer, that is a backup or memory, it is available. So, first of all, once you receive the order, after interacting with the bank to stop the further operations of the accounts, and whatever your signature and the NCLT order you have to hand over the bank, and thereby in future whatever the earlier directors issued checks that will not be honored by the bank. At the same time, after reaching to the company, after introduction is over, then you have to call the systems administrator. And once the systems administrator you call, then along with him, first you move to the systems room. How many users are there for the system? What is their user ID? What is their passwords and all these things? First you block that. Otherwise, some other companies, some unscrupulous persons, they will change the system data. That's why to avoid that one, first you go there, block that all user IDs, and thereafter, based on the need, based on the interaction of the people, and with the help of the IT person, slowly you give the user ID and password for operations. Whenever you are allocating the user ID and password, definitely for what purpose, what is his role, and what is the previous transaction report of that particular person. All these things, first backup is to be taken. If at all, once a user uses user ID and password, and whatever the data is there, if at all he erases it, then it will be a problem. So, as on date of your reporting to the company, whatever the data that is stored in the computer memory, or you take the backup by way of the data tapes or RAM, random access memory, like that. So that is to be preserved. During the course of time, if at all they have altered, then the backup is supporting data is available. The backup of the computer system is nothing but the financial transaction, the profit and loss account, the balance sheet, whatever the financial system is there, or ERP, all are available in the backup. So take the backup and keep it under your custody. Now coming to the company is closed 2 years back or 3 years back, or sometimes it is 5 years back also. But here the records are not available, and assets are, how many assets are there? All these things are in question marks. But you have to prepare a provisional financial statement. That is not final, but provisional financial statement to be prepared. How to prepare that one? All these things up to 4 o'clock, I will discuss that one. Preparing provisional balance sheet on the CIRP commencement date is not a routine exercise, routine accounting exercise. Suppose you take, for example, one company is there, they are defaulted. The company is a going concern company. And last year or financial year also, they have submitted the financial statements. Then this is not a problem. But those companies which are closed long back, and in those companies only, we have to prepare the provisional financial statement. Once the company is in financial crisis, the promoters on overnight, they don't close the books over a period of time. 1 year before or 2 years before, one by one, the assets are to be sold, or assets are to be given for undervaluation, or assets are to be given as a gift, or some borrowings, all these things they will do. So the provisional balance sheet is not a routine accounting exercise. It is a reconstruction exercise. So with the help of whatever the data is available, whatever the physical assets are available, you have to reconstruct the financial statement under the framework of IBC, typically undertaken by the IRP, because the first person in that particular CIRP, the particular process, the first person is none other than the insolvency interim resolution professional. When reliable, up to date, the financial are unavailable or outdated. If at all are available, then provisional is not required. The correct financial statement is to be built. But in that the certain cases that full record is available, then on insolvency commencement date, we put that particular border date, and we will prepare the, if you ask the system also, system will prepare the financial statements on that insolvency commencement date, subjected to once the company is in continuing condition or going concern like that. The objectives of the provisional balance sheet, particularly in CIRP. The provisional balance sheet on the CIRP commencement date aims. What is the purpose? What is the objective? Present a true and fair through provisional financial statement. Okay, the company stopped 2 years back. Records are not available. At this juncture, we have to reconstruct whatever the liabilities known to you, whatever the assets are available, and whatever the previous the assets are there. Particularly some of the companies, they will file the balance sheet or financial statement to the register of companies 1 year back. You take that as a base. After that, you have to reconstruct whatever the present this one is there, help in determining the fair value and the liquidation value. So it helps in determining the fair and the liquidation value of the firm, supporting information memorandum. Before you are issuing the expression of interest, after that expression of interest, request for resolution plan, and some of the particular prospective resolution applicants, they will ask the information. But once you have not financial statements are not available on CIRP commencement date, how you will prepare this information memorandum? So that's why the provisional financial statements are to be prepared. Assist a committee of creditors in decision. So whatever the leftover assets, whatever the liabilities to be paid, all are brought to the notice of the committee of creditors. Then they will take a call. Then they will take a decision. Identify. You have to identify missing assets. Suppose the last year balance sheet is there. Plant and machinery. Now today you are in the company. In the production department, no plant and machinery is there. What was happened to that plant and machinery? When they have sold, to whom they have sold? Suppose last year, raw material closing balance in the balance sheet last financial year, 10 crores stock is there. Once you have going to that particular store department, there is no stock. Nothing is there. Only the store closed. No store keeper, no store's ledger available. What has happened to the stock? The closing stock. After closing stock, whether the stock is processed and the finished goods are prepared and sold, or whether the stock is sold to raw material is sold to any other person, particularly preferential or the undervalue or fraudulent, all these things you have to verify because the base balance sheet last year it is available. From there, your reconstruction of the provisional balance sheet will start. Undisclosed liabilities. Some of the companies, even they are in live working, some liabilities they will show, some liabilities they don't show also. Even though some companies audit and all these things are happening, some liabilities they don't show. Why? Because if at all they have shown, then that liability for what purpose? The shareholders will rise and the preferential fraudulent transaction, all these things. Once you prepare the provision balance sheet, all these things are possible. Step-by-step methodology for preparation of the financial statement, that is a provisional financial statement. What is a step-by-step methodology? How to prepare? Start with the last available audit financials. Okay. Today you have entered into that particular organization as the IRP. Then books are not available, all are not available. Then first, when these financial statements are uploaded in a register of company service, you take that as a base. From there, you have to reconstruct that one. Use the latest filed balance sheet, even if 2 years old, as the base document. Okay. Once it is not there, no problem. But we have to do something. We have to do reconstruction. Whatever the available balance sheet is there, that we have to take and extract. In that balance sheet, what are the fixed assets mentioned? In that balance sheet, lost the particularly the filed balance sheet to the register of companies and investments. Okay, what is the present status of the investment? Whether still investments are there or sold to anybody. Fixed assets, whether fixed assets, whatever the fixed assets mentioned in the balance sheet, lost balance sheet, whether physically it is available or not. Loans and advances. In that particular loans and advances, particularly the company also sometimes they will give loans to the staff members or to others also. or advances, temporary nature, and trade receivables. So in the assets side, the receivables are there. That is called credit sales. That is called credit sales. The credit sales, how many data are there? Or how many bills receivables are there? So that also you have to verify. Not only that one, if you see the liabilities, financial and operational, how many loans the company has borrowed from the banks, from the non-banking financial companies, and how many creditors are there, supplies, vendors, and or bills payable. All these things you have to see from the balance sheet, and accordingly, what is the present status? But here, the prime or important person for reconstruction of the balance sheets, only the finance department of the company. Only the finance department of the company. They will support because they prepare this balance sheet and they have submitted to ROC earlier. They are having the familiarity and they will tell the what was happened to the assets, what is the correctness of the liabilities and all this. But don't rely blindly. Treat it only a starting point. Starting point, this may not. Sometimes you have to go back also. So that's why don't rely blindly. And if at all the finance department people, they told some stories, then listen and proofs are also required. Treat it only a starting point. Treat them as a starting point. And now, methodology preparation, roll forward to CIR. So once the base is there, from base to CIRP commencement data, I have to take the base and add or less, and finally, my provisional balance sheet should be prepared on CIRP commencement date. You need to reconstruct movements of the last balance sheet to CIRP commencement date. Assets, side adjustment. Whatever the you have taken the starting point, closing balance of the assets in the available balance sheet, first you take that figure and add, if at all any new purchases are there in the company. Once new purchases are there, it is the invoices are available. If any assets are purchased, like a plant and machinery, the invoices are available. And once the invoices are available, and normally the payments will also be made. Payments will also be made by the company. That also through bank statement, I have to prepare. So that's why whatever the additions are there, the base figure, we have to add the additions. Deductions. What is the deduction? Suppose the flow, the year-end balance, every company will provide a depreciation. The plant and machinery, or buildings, or computer system, different percentages are there. 10% or 15% or for IT, hardware 33%, 33.33%, or software if at all purchased, and 100% of provision, particularly software, because the technology obsolescence is more. So here you have to provide a depreciation, and that provide depreciation to be deducted the opening balance plus any additions of assets are there minus depreciation. And if at all any assets are sold from the last available balance sheet to CIRP commencement date, that is also to be deducted. And adjust inventory based on the physical verification of assets. Okay, earlier in the balance sheet, inventory is mentioned. But today, when I visited to the stores department where the stocks are inventory is preserved. If there is no stock, you have to mention that earlier balance sheet is this one. As on CIRP commencement, zero stock. Zero stock. So the stock should be mentioned as a zero. And the receivables. So whatever the receivables opening balance is there, if at all any bad and doubtful debts are there, remove that one and the remaining is the receivables. And here, this is only, I'm giving only a tentative construction. Why? Because this is not absolutely perfect. But on CIRP commencement date, you have to prepare the balance sheet. Next, liabilities adjustment. If you come to the liabilities adjustment, bank borrowings. So the bank borrowings are there. But how to bank borrowings? You take the account statement from the banks. If at all the company is having 4 bank accounts, 4 loans, 4 banks, you have to take the account statement. And whatever the closing balance is there as on CIRP commencement date, that you have to take as a closing balance. So in that case, earlier year, the closing balance of the bank loan and whatever the interest add or particularly payments made through bank statement, you take out and arrive the closing balance. And particularly interest accrued from time to time. Bank monthly also they will add the interest. That is also to be added. And add operational creditors. So here in the liability side, particularly after the financial creditor is over, then you have to see the how many creditors are there. The creditors is nothing but accounts payable. Accounts payable. In that case, vendors, statutory dues, all these things are there. Vendors. How many vendors the company is engaging for procuring the raw material or sometimes salaries, sometimes other services like cloud computing or different services or electricity or etc. And include contingent liabilities if at all identifiable. Once the assets and liability statements are you have prepared based on the base available, from that add and less for each and every asset and each and every liability, then you have to come to the contingent liabilities. What is a contingent liability? What is a contingent liability? The contingent liability is nothing but the company also taking some bank guarantees from the bank or letters of credit for foreign imported goods. Not only that one, if at all any disputes are there with regard to taxes, either GST or income tax, that is also contingent liability. If any the appellate authority, the cases are contested, that also you have to take into consideration. But this is not the part of the balance sheet. It is a footnote of the balance sheet. It is a footnote of the balance sheet. Not only that one, sometimes the company also filed a case with regard to workman compensation or etc. etc. Some people they filed against the company, and what is the latest status? Whether we are going to win or not to win, and accordingly, whatever the approximate amount to be the judgment to be given by the courts, you have to forecast that one with the help of the legal professionals also. So, accordingly, the assets, the liabilities, the contingent liabilities are to be prepared. This is only a provisional. This is not a final. This is only a reconstructed one. From this, and during the course of time, if at all any changes are required, you change that one and prepare the latest one. That too, the particular provisional balance sheet should be on CIRP commencement date. Okay. Equity. On the liabilities, top of the is the equity. Take for example equity, the preference shares or equity shares. Take the base figure, the last financial year, that is audited financial statement uploaded to the ROC. From there, whatever the this profit and loss account, any profits are there, add that one. Any dividends are paid, less that one. If at all any losses are there, deduct all these things. If records are missing, that treat the balancing figure as a surplus or a deficit. Suppose it is the balance sheet means a balance of both the assets and liabilities. If at all that is not matching, then whatever the difference figure is there, we have to take them. And accordingly, the difference between these two, accordingly, and we have to mention suspense account within bracket either surplus or deficit. Once it is assets are more or liabilities are less, that is a suspense account deficit. Or if at all the liabilities are more, assets are less, that is a deficit. If assets are more, liabilities are less, that is surplus. We have to mention that is even if you forego if you go back to your accountancy and bookkeeping also, if the balance sheet is not balanced, the difference amount normally we will put it as a suspense account. And later on we will adjust whatever the adjustments are there. Next, what is the source of data for preparation? Okay. We are going to prepare that particular this one. But what is the source? The first source I told about the filing of the balance sheet with the register of companies ROCs. Every financial year, after the AGM is over, annual general body meeting over, within 30 days, the companies are filing the financial statement to the register of companies. And whatever the trading or profit and loss account or balance sheet or cash flow or funds flow or along annexes or schedules, they will submit online submission through particularly through the ROC website. The XBLR means Extended Business Reporting Language. The fields they will fill up and sometimes they will send the particularly the hard copies to the concerned ROC also. So the source of data for preparation. Given outdated ROC filing, the RP must rely on the multiple process triangulation. One source is not sufficient to prepare the provision balance sheet. The number of sources, auditors, and other sources like one is statutory and regulatory filing. The companies are filing with the Ministry of Corporate Affairs through ROC, where the register office under its jurisdiction, AOC 4, that is financial statement, MGT 7, annual return. This is uploaded. Suppose if you want to download that one, you pay the amount and download because these are the public documents. And AOC 4 download or MGT 7 also you can download. From there, your business will start. Your business means reconstruction of the financial stream. And not only that one, today, whether it is a sales or purchases, the companies every month they have to submit the goods or service tax returns to the GST. So GSTR 1 or GSTR 2, 3B, that is also very useful. So to know the sales as well as the purchases and how much GST paid, all are available in that GSTR returns. The GSTR1 or GSTR3B is also useful. Not only that one, to arrive the sales, the companies are also filing income tax returns. So the company income tax returns they will also file. So whatever the latest return is there, in that return, what is the total income and all these things are available, particularly the ITR return of the company or 26 AS also, that TDS statement. So this is also because of why what I told is one source is not sufficient. You have to gather the information from the multiple sources, then 26 AS. And these provide revenue trends, particularly the sales, tax liabilities, particularly how much tax is to be paid on GST, how much paid by the company, what is the balance to be paid, like that income tax, how much paid, how much to be paid, and credit or snapshots also. So through this also we can build up the creditors, particularly the operational creditors with the help of this one. Not only that one, whenever you are filling up the financial statement, the interest paid on loan, that is also the sales turnover, the purchases, all these things are required for preparation of the provisional balance sheet. Next, banking and financial institution data. That is also required. Today, companies are borrowing funds not only from the banks, from also NBFCs, non-banking financial companies. Non-banking financial companies. So once in the old balance sheet, that is the latest balance sheet available in ROC, if the bank loan, under bank loan, State Bank of India, how much, PNB, how much, if they mentioned, you take that one and with the help of the bank number, account number, you ask the bank to provide the data. What is the last 31/3 last financial year? And what is the current balance? If you take the financial their account statement, it is very easy to prepare the cash book and whatever the interest is there that can be debited to the profit and loss account. Whatever the bank charges are there, that also it is very easy to reconstruct that one. So that's why sanction letters are also one of the important area. Once the company is taking loan from the banks, sanction letters are there. In the sanction letter, how much loan is sanctioned, what is the periodicity of the interest to be applied, and what is the rate of interest. In that particular sanction letters also, what type of collateral security taken by the bank while giving that loan. So to build up the assets side also, then the sanction letters of the bank is also very useful. And like that sanction letters, if at all it is from State Bank or PNB, why this is helpful means actual, particularly the only particularly the actual cash flows and undisclosed borrowings, security charge assets, etc., etc. So all these things are useful. Sir, are you getting my point or not? Any doubts up to this point of time, sir?
No, sir. It's clear.
Okay. Because here we have to prepare the balance sheet. Provisional only. This is not an accurate. It is as good as a draft balance sheet. Draft balance sheet. So that's why we have to prepare this one and based on the available records, based on the available physical assets, and all these things are required. Only 1 minute, sir, madam. Only 1 minute. Only 1 minute. Okay. Now coming to information utilities. Actually, here some information is available in information utility. As you know pretty well, as per the regulation, the financial creditors are to be submitted their loans information to the information utility. And whenever the case is filed, the along with application, whether it is 7 or 8 and 9, then they have to get the information from the information utility. But 8 and 9 operational creditor is an optional, but the financial creditor is mandate. Today, what is happening is almost all banks, they have uploaded their financial the loans and advances of companies or individuals also. They are uploading the information with information utility. Suppose if at all you are taking one loan 60 lakhs, first whatever the information is there along with the document, bank will upload to the information. Information utility, they will get the confirmation from you. If at all you have not given the confirmation after 30th day, they will treat they will treat that deemed to be approved. Deemed to be approved. In the similar manner, the financial creditors are in the similar manner operational creditors also. So the financial creditor and the operational creditor, whenever they are giving any type of credit to the particular the company, then this is to be uploaded NESL. That is the information utility. So NESL, National E-Governance Service Private Limited, this provides verified debt records. So once the NESL information is there, that is correct and updated and perfect, no question. Even adjudicating authority also, they will accept that information. They will accept that information. Default history. And once NESL also, they will provide the information of the default history also. The financial creditor from time to time, they are updating. Once the account turn into non-performing, the bank will inform to the NESL. Once the bank is also giving, once the bank, they are issuing any particularly surface notice like that, that also they will update the same with NESL. So that's why the default history is available. Creditor authentication. So whenever the loans are taken, the authentication is also there. Suppose a bank is given loan and you have taken the loan. Once you are authenticated, then only the NESL will give the certification. Till such time they don't. But further also, there is no need to wait so many days, and they will give some time also. After that time, it is deemed to be treated that you have availed the loan, etc., etc. Some of the people, particularly they have taken the loan, they are not confirming in NESL portal. Then NESL, after certain days, that is to be deemed to be treated as that the borrower has availed the loan. Even take for example, whenever the loans are given by the banks to the companies, Section 77 of the Companies Act, they have to create the charge on the company assets. That is a charge on the company assets. So that also one source, how much loan taken, and all information is available through NESL also, and the books and the internal records. If certain books, if at all available, based on the base data, to insolvency commencement date, you have to prepare the provisional balance sheet. For that, the NESL is useful, the bank sanction letters or bank account, the bank transaction, the accounting records, all are available. And here, the books and internal records. One is the trial balance. If at all trial balance is there, then we can reconstruct. So from the last balance sheet to this one, we can reconstruct it up to insolvency. Not only that one, general ledger. What is a general ledger? In the general ledger of the book, what are the total assets? What are the total liabilities? What are the additions? Or what are the deletions? All are mentioned in the general ledger also. This general ledger also, if you update, then it is very easy to prepare the provisional financial statements. Not only that one, fixed assets register that is available in the company. Yeah, once the company is purchased plant and machinery or any land or any building or any the fixed assets they have purchased, then it is with the help of that fixed assets register also, we can reconstruct, we can prepare they prepare the provisional balance sheet. Not only that one, inventory records. Inventory records means that is called stores ledger. Stores ledger also, what is the opening balance, what is the purchases, what is the consumption, and each and every stock, what is the bin card, what is the minimum level, maximum level, reorder level, in, out, balance, all these things are also. Not only that one, debtors ledger is also available. What is meant by debtors ledger? Once the company is selling the goods on credit, that is called credit sales, then they will enter into the debtors ledger. So in the with the help of a debtors ledger also, I can prepare the debtors or bills receivable of the assets also. Not only that one, creditors ledger also available in the company. What is a creditors ledger? The creditors ledger is nothing but the company is purchasing raw material from the vendors or services provided by the vendors. They are entering into the creditors ledger. Through that also we can reconstruct, we can pay and they prepare the balance sheet also. And the share capital register is also available. What is the share capital? What is the authorized capital? What is the issued capital? What is the paid up capital? How many shareholders are paid? And how are they? What is the total capital? All these things. If it are shares are transferred to others also, that also they have mentioned in the share capital register. With the help of share capital register, we can prepare the share equity capital of the company also for the provisional financial statement. Not only that one, the companies are also issuing debentures, the companies are also issuing bonds, the companies are also issuing fixed deposit. For these three also, registers are available. So whatever the closing balance and you take, if at all any no transactions after the balance sheet to till date, then the closing figures we can take it. Even incomplete data is useful for reconstruction. So useful because something is better than nothing. Something is better than nothing because it is a provisional. It is not a audited, and we have to reconstruct. Why we have to reckon? Otherwise, if at all you have not prepared the provision balance sheet, if at all any prospective resolution applicant came to your the office, yeah, to prepare the PRA, to prepare the resolution plan, tell me, sir, what are the assets available? What are the liabilities to be paid by me? If at all I am going to take. If at all you are in dark, no, sir, no books are available, nothing is available, then no PRA will come to your office. So some provisional, some draft, some the andaze figures with whatever the figures that are available, and some evidence is whenever I am taking some amount for the asset or liabilities or expenditure or income, some proof is required, because I should not imagine, I should not forecast. Suppose I take for example, plant and machinery is there. Last year, financial year, they have submitted the 24-25, they have submitted. After that, no balance sheet. So the plant and machinery, some amount is there in the audited financial statement. I have to take that figure. Then I go to the fixed assets register, and whatever during that financial year, any new additions are purchased or not. If there is no the purchases, and after depreciation, that is the final figure. So whenever you are preparing the provisional financial the statements for each and every asset, for each and every liability, and you have to mention the remarks, how you have taken that one, what are the bases, and the proofs are also to be filed in a separate file. And accordingly, tomorrow, if at all either COC or the adjudicating authority, how you have prepared the balance sheet, provisional financial statement, or if at all any prospective resolution applicant, you are giving mention in the information memoranda. These are this base book, base file is useful for you. Claims received during, this is another area. This is another area. So through claims also, we can develop the balance sheet. So once you have given the public announcement, once you develop the this type of the financial particularly claim the public announcement, if you given, then automatic the 1 minute, sir. Okay. So once the public announcement is given, people will start to submit their claims, whether it is a OC or FC or a class of creditor, or in case the home buyers, if at all it is a real estate company, all will submit. And whenever you are giving that advertisement also, you are instructing the claimants with the proof only you have to submit the claim. Then some proofs we will receive from the financial creditor or operational creditor or class of creditor or the particular the home buyers in case of real estate. This is also useful for build up the financial state. For build up the financial state. So the claims are submitted by the FCs, financial creditors. Suppose one bank is there. During the last financial year, that a bank the loan not mentioned, and during the latest financial year only, the company has borrowed the amount. In the last financial year ending, this loan is not there because the company has taken during the current financial year. Then once the bank is submitted the claim along with the sanction letter, or if at all document is there, whether it is a hypothecation or mortgage, then the bank will also submit the claim along with the proofs. Then automatically you can take that figure as a loan from the bank, because of the bank submitted sanction letter. That sanction letter all signed by the corporate debtor. Not only that one, hypothecation or mortgage agreement for the securities, and for that securities company authorized people signed, and all these things are there. You can directly take, along with they will submit the account statement also. In that case, straight away you can take that loan to the balance sheet as a liability. Class of creditors, the bonds, the debentures, the fixed deposits, or home buyers should file against the company in various courts. For contingent liabilities, we have to take this one. How many should file are there? What is the probability of the particular win or not to win the case? Suppose employees compensation, workman compensation is there. Some accident was happened. Accident, the court, the judge going to give the judgment shortly, and the court is going to give that judgment in favor of us, in favor of the borrower, or in favor of the claimant. Then that is also useful as to mention as a contingent liabilities. Or if at all bank has they given any bank guarantees or letter of credit, and that also to be taken. So should file or contingent liabilities for bank guarantees or letter of credit. And the employees. Suppose the company has not paid the salary. Salary means the employees, the company has stopped the salaries from the so and so month, and the workers or the employees, they will also submit and annual reports, if any annual reports. Suppose I take for example to build up this particular the balance sheet or prepare the provision balance sheet, whatever the annual reports that are filed by the companies to the ROC, or if at all it is a listed company, the particularly SEBI or NSE or BSE, they will submit that the annual reports also. Through that also another source. Why I am telling all these things means one source is not suffice. Multiple sources are required. Through multiple sources only we have to gather the information, change the information, revise it, and we have to get a 90 or 99% accuracy level we have to take. But this is a small job, not a small job. It is a difficult job. Second one, if at all you are a financial expert, that too you know about the balance sheets and all these things, then only 1 minute, sir. Only 1 minute. Okay, sorry for the inconvenience. So the annual reports is also one source. The annual reports, particularly company will prepare the annual reports after the annual general body meeting. These are to be filed with ROC. These are to be filed, if at all it is a listing company, they have to file to the NSE or BSE, whatever the listing arrangements are there. And this is also another source. And suppose, take for example, even the company website is live in the investors menu. In the investors menu also this particularly balance sheets are also available. So here what I am telling is one source is insufficient. At any cost, we have to give some information about not some information, accurate information. Liability is accurate information. Asset up to 99% we have to try, and if not possible 90. But whenever the additional information is not available, mention, and along with the provisional certificate, whatever your particularly comments are there, whatever your findings are there, all are to be mentioned. All are to be mentioned. Now, third party confirmations. Suppose I take, for example, debtors list is available. And debtors, if at all they have delayed in payment, rate of interest to be charged. And the company, they will prepare the debtors, each debtor, as on insolvency commencement date, your amount is this much. Please confirm. Then, like that, the creditors confirmation. In the company, last financial year, the creditors and debtors book is available. And during that 1 year, no, the payments or receipts, that information is not available. So based on the earlier information, if at all I have sent an email to all the debtors or all the creditors, one by one, they will particularly confirm. No, sir, I have taken this credit sales, no doubt, but I have paid the amount during the month of June through the NEFT or through RTGS or through the check. Check means so. Then through confirmations also we can build up the provisional balance sheet and balance confirmation from the lenders. So what is the latest balance sheet as on 35, as on insolvency commencement date? So the confirmations are also required. So debtors, the creditors, the financial and the debtors, creditors, the financial creditors confirmation is also very much required. And physical verification. Okay. Some records are available, last time records. Some particularly generators, one asset is there. Then you have to ask the security or ask the CFO of the company, if at all it is a company is alive. Then you ask where this asset is located. So some of the assets, as per balance sheet, the physical assets are available. You ask them to show the asset because you are in the company, but you may not have the location where it is located, whether it is located in the head office or in the factory or in the particular branches, etc., etc. And the inventory verification. If at all last latest inventory is 10,000 kgs of raw material, whether the store's 10,000 kgs of raw material is available or not. Once it is available, then what is the market value? And accordingly, you have to arrive the particular this one. And helps to detect missing or siphoning of assets. Suppose one generator is there. The generator cost is 10 lakhs or 20 lakhs. But the generator is not available. Means it is missing or siphoned assets. So once the company is going to face the CIRP, some of the promoters, what they will do is they will sell or they will give to the related party and all these things. Overstated book values. This is also happening. What is the overstated book values? Suppose the data they have not given. they have not sold the stock on credit. But they mentioned the number, the name and dummy invoices they created. In the similar manner, the raw material also. So to overstated book value. So they supplied some X, but the invoice is X plus 2 or X plus 3, like that. So the overstated book values are also there. And other external sources. What are the other external sources? This information is also useful for you to build up the particularly the provisional financial statements. Up to this point of time, any doubts are there, sir, madam? Up to this point of time, any doubts or clarifications are required?
These
No, sir.
tablets are made of 99.
Because here, lot of the logical thinking is also required. Books are not available, staff is not cooperating, corporate data is not cooperating, and I have to prepare the provisional balance sheet at any cost. Otherwise, how I will run the show? Show means I have to give the particularly expression of interest. I have to prepare the information memoranda and how many assets are there, and I have to give that if at all our assets are located, then I have to give to the valuer. If there is no financial statement latest, if the particular valuers I have appointed, what assignment I have to give, which assets they have to value, all these things. So today what is happening means 1 or 1.5 years before only the companies, they are not attempting any one. If at all the cash is received, simply they are taking over the cash, they eaten away the cash. And if at all assets are there, simply some people they will take out that particular assets or sell it with the least cost and they are misappropriate the funds. In that particular scenario, as on insolvency commencement date, how I will prepare the provisional balance sheet? It is a challenging one. And other external sources also to some extent for build up or for preparation of the balance sheet. Utility bills. Suppose utility bills are there. I have to mention in the profit and loss account. And if at all the amount is not paid to the electricity board, then it is liability side outstanding bills. Because I have to prepare the balance sheet. Second one is lease agreement. If at all in the company, at least lease agreements are there, the company has taken on lease some equipment, capital equipment, proclaims or some lease the fixed assets. So what is the lease agreement? Monthly, how much I have to pay? Up to what amount I have to pay? Up to which month I have paid? And what is from which month onwards I have not paid? Second one, if I have given the public announcement, the leasing agreement, the leasing company will also file the claim. How to verify? How to verify? If at all I have not, they prepare the provisional balance sheet, how to cross-check that one? Suppose take for example, puff transactions are there, preferential, undervalue, fraudulent, extortionate. If at all some balance sheet is to be prepared and the forensic auditor or transaction auditor, he will verify and he will give the report. Otherwise, how he will give the report? So the prima facie, the heart of the CIRP is the provision balance sheet. If at all the ready-made balance sheet is available, then there is no problem. That situation are rare situations. Next, lease agreements. That is required. Suppose one XYZ leasing company is there. During public announcement, they have submitted, boss, for the last 10 months, I'm not getting the lease rentals. The machinery is in your premises. First, machinery is there or not? If it all not there, then that amount also we have to pay to the lease company. Because the machinery to be handed over once it is not required, or if at all it is in the same premises, locate that one, and immediately if it is not a going concern, you have to send back that machinery by taking the acknowledgement. Whatever the monthly lease rentals are there, that lease rentals you have to pay. The lease rentals you have to pay. Next, otherwise, the claims are not properly verified. Insurance policies. Why the insurance policies? For companies, particularly all companies, their plant and machinery to be insured. Their stocks in the stores, that is to be insured. Or whatever the electronic equipment like computers or electronic equipment is, that is to be insured. Buildings, that is to be insured. Why buildings are to be insured? If at all earthquake and the or other natural calamity like floods or tsunami, if at all washed out, then the insurance company will pay. So in the insurance company policies also, the nature of the property, the location of the property, the value of the property details are also. Through that, we can build up the provisional balance sheet. Provisional balance sheet, not only single source, even multiple source. So insurance policies also. So the insurance policies are if at all it is not there, they lost the whatever the profit and loss account earlier it is there in the profit and loss account, insurance premium paid for this plant and machinery or buildings or stock, and take that old policies and locate that particular asset and collateral offered to the banks. That is also another source. Suppose here the balance sheet not available, and the company has given a land and a building as a collateral security for the working capital loan. Then if you ask the sanction letter from the financial creditor, who is a member of the COC, Committee of Creditors, he is a member. Then you ask that financial creditor, can I have the sanction letter? Okay, if a sanction letter is there, what is the primary security? What is the collateral security? And the banks are also having the valuation certificate. By sanctioning the loan, they will give the values for valuation. Then only they will give the loan. That also useful. So collateral security offered to the banks or financial institution, and the valuation reports are also. Suppose I take, for example, in the remote case, even a section 13.2 or 13.4 surfacing notice, whenever the bank, before filing the case in IBC, the banks naturally they will make attempt for surfacing or DRT also. Hence, the paper advertisement is given, the property particulars details are available. So then what is the south, what is the north, what is the landmarks, what is the value of the particular property as on date? You take that value as in the balance sheet. Particularly if land and buildings are there, you take that value and mention that one based on the paper advertisement given by the financial creditor in so-and-so paper dated so-and-so. Books are not available. That's why you have taken this one. The preparation of a balance sheet is an art as well as science with the available data. And the financial submitted by SEBI for listing. Okay, here it is not available. If at all it is a listed company, listing agreement and quarterly intervals, the company has to pay. So, what are the latest filings are made by the company with SEBI or stock exchanges? If at all it is a listed company, the financial sources submitted. Why can't you gather that information? If at all you ask, definitely they will provide. Or if at all it is online, you can download it also. Or corporate guarantees set to the subsidiaries. Sometimes the subsidiaries are getting some loan, they're going to take some loan. For that, the corporate, the parent company, they are giving a guarantee. So that also one source. And a credit appraisal reports of the financial creditor. Whenever the financial creditor, suppose the financial creditor is in your COC board only, committee only. And if you ask the financial creditor, can I have the particular credit appraisal report while sanctioning the loan to the company? In that, whenever they are giving the loan, last 3 or 5 years financial data they will mention. The sales, the profit, or the assets, or not only that one, ratios, current ratio, debt equity ratio, debt asset turnover ratio, whether it is a good condition. Not only that one. Suppose I take for example the credit rating companies report. Some companies that availed a loan with some banks. Immediately, today it is a real-time recording of the credit rating companies. Suppose today I have taken a loan 60 lakhs from State Bank of India. Immediately it will be recorded in CIBIL, TransUnion, the CIBIL, TransUnion, or CRIF, Highmark, and then 4 companies are there. 4 companies it will record. So if at all you are taken the company credit rating and the credit information, that is called commercial, the credit rating information, the credit information companies. Today it is online. Earlier, after 1 month or after 2 months, the loans are recorded in the credit information companies. Today, the Reserve Bank of India also given directions to the CIC, credit information companies, make it online, at least within 1 week. So that if at all you have taken by using the companies, the particularly the PAN number or the certificate of incorporation, etc., then you will get the report also. Once you report how many loans availed, what are the various loans, all information is available. Last week I have taken one CIC report of a XYZ company. The total report, particularly current information company, normally individuals 10 pages may be there. In that company, 650 pages are there. That type of loans, outstanding loans are there, closed loans are there, bank guarantees are there, letters of credit is there, live accounts are there, closed accounts are there. 650 pages. That is another source. From that, we have to get the information. And IT, GST, appellate authorities. So some of the cases, definitely they will file with the IT companies, IT appellate authority or GST appellate authorities or councils. So here, whenever the case is whenever they given the show cause notice, definitely the company will also rise to that occasion. And whatever the proofs and financials and the profit or sales, all are provided to that particular appellate authorities. Take that one. If at all that is there in the finance department, that is another source to build up or to prepare or to construct the provisional balance sheets. Special, are you getting my point, sir, madam? Sir, any discussions? Sir, any discussions on this subject? So far, I have discussed something. Hello? Okay. Special challenges and practical approach. When records are poor or manipulated, when records are poor or manipulated, bank-based reconstruction method. Here, the company is not preparing the books properly or manipulated. Then I have to take in the figures from the bank because the bank records are perfect. They will apply the interest from time to time. Whatever the credits they have given, that is accounted for. If at all the company asks or any other person like IRP or RP, they are asking the financial statements, definitely the account statement they will provide. And the GST turnover reconciliation or ratio based estimations also. Current ratio 2:1. In the current assets, the data are there, stock are there, cash is there. That is tallied. And a current ratio 2:1 ratio they have calculated. If 2 is there, liabilities should be 1. Liabilities should be 1. If at all current ratio is 2:1, current assets are 200, liabilities are 100. So here the special challenges and the practical approach. Treatment of unverified items. Classify them subject to confirmation, previously estimated. You use the words unverified because sometimes it is not possible also to confirm. You mention subject to verification. Or you mention, if at all it is approximate, provisionally estimated. So once this type of information is provided, then automatically some possibility is there to prepare the provisional balance sheet. Otherwise, the provision balance sheet is very, very difficult. Identification of red flags. While preparing, IRP should flag sudden increase in receivables. Why? Any artificial names are included in the particularly the data, the creditors. During some of the CIRPs I have come across that. And claims are much more than the creditors mentioned in the balance sheet. Because anyhow, the IRP will settle all the claims. The claims, if at all they mentioned in the balance sheet is 1 crore, but submitted claims is 3 crores like that. And a related party transaction. And asset stripping before CIRP. This is a general asset stripping. So anyhow, the company is incurring losses. Anyhow, the company is going to be closed. And financial creditor or operational creditor, they will file a case with NCLT. So before admitting the case, one by one alienation. They will take one by one asset. And in cases to get the money also, they will sell the planted machinery also. If at all any lands are purchased by the company elsewhere, that also they will sell. So these are the red flags. Suggested format for provisional balance sheet. What is the suggested format for the provisional balance sheet? A typical structure is financial creditors you have to identify from the liability side, that too from the banks or non-banking financial companies or any financial institutions, etc. Or sometimes long-term sources of funds like debentures, the bonds, the fixed deposits, etc. Operational creditor on the liability side, particularly those who supply the vendors, the raw material or services or electricity or water or communications, etc. Statutory dues, how much it to be paid, the property tax of the company or any licenses to be renewed, statutory dues, or the statutory dues, particularly if at all the company has to pay the TDS or particularly the gratuity or that ESI, employees state insurance, that also other liabilities. So the equity is the balance figure. After writing, if you're matching with the assets, whatever the balance figure is there, that is to be treated as a equity. If the assets are more, liabilities are less, the deficit should be treated as a equity. And if you go to the asset side, the fixed assets are there. The fixed assets net only. Net means the latest balance sheet, whatever the additions are when new machinery purchase, and whatever the old machinery sold, and what are the depreciation, then the remaining is the net fixed assets. And what are the inventory? The inventory is also one type of that particular cost, the asset. What is the store's ledger? What is the invoice? Who is the storekeeper? Next, whether the storekeeper is maintaining the store's ledger or not. Why the inventory is disappeared? And what are the latest earlier one balance sheet figure, opening balance, and what are the additions and the closing? That is latest closing value, that is insolvency commencement date, inventory value, trade receivables, whatever the balance sheet available earlier, that is to be treated as a opening balance. What are the new credit sales? What are the payments made by the earlier debtors? And if at all any write off the trade debtors are there or any discounts are given, then it comes to the closing balance. And the cash and bank balances, whatever the earlier balance sheet, what the balance sheet cash and bank balance to be taken as a closing balance. And that year it is a closing, now it is a opening. And what are the sales turnover? What are the salaries paid? What are the expenses incurred? And this is to be tallied with the bank current account. And whether it is a cash in hand or bank balance. And loans and advances. Last balance sheet, whatever the closing balance is there, that is to be treated as a opening balance. Whatever the new loans are taken, that is to be added. Whatever the interest that is to be charged by the banks, that is to be added. And what are the payments made by the particular corporate debtor to the banks, that is to be deducted. The remaining is the loans and advances closing and other assets, and including notes, basis of preparation, how you are arrived at that one for every asset or for every liabilities, how you assess, that is called a basis of preparation. And limitations, because the books are not available or the records are not available, like that you mentioned assumptions used whatever the assumptions you have used while arriving that information, that also to be mentioned. So here the assets and to be mentioned, including included notes also, documentation and audit trail. It is very important. If you take the audit trail in the computer system, because as per double entry bookkeeping system, for every debit there is a credit, the double entry bookkeeping system. So the audit trail or documentation is also useful in preparation of the provisional financial statement. IRP must maintain the working papers. Whenever you are reconstructing the balance sheet and how you reconstruct, what are the assumptions, what are the source document, what are the evidences you have taken, all these things you have to take that working papers, source-wise reconciliation. Reconciliation means particularly debtors, opening balance, what are the new debtors they have given, and what are the discounts, what are the write-off for debtors, and the closing balance. In the business, in similar manner, what are the account payable or creditors, the opening balance, and any fresh purchases are there, any they add any discounts offered, and what are the payments made by the company, then it should be tallied with the closing balance. And the source wise reconciliation, assumptions sheet. For every asset or liability, you are reconstructing that or arriving some amount. What is your assumptions? So once you have prepared that one, it is not a final one, because you are in dark. Particularly, you are not having the books properly. In that particular situation, whatever your assumptions are there, all assumptions are to be mentioned. And because this document may be scrutinized by, why you are doing like this? Because you have to submit to the NCLT. Sir, books of accounts are not available. And sometimes the corporate data is not providing support. And sometimes he is not aware where the books are kept, or the staff is resigned and nobody is there. But based on the available information, based on the available register, I have prepared this one like that. And the committee of creditors, even committee of creditors also, they will ask the IRP or RP, how you have prepared this particular provisional balance sheet, how you prepared the cash and bank balance, how you prepared the stock, how you prepared the closing balance of the plant and machinery, how you arrived at the building, how you arrived at the equity, how you arrived at the creditors, how you arrived at the bank loan, all these things they may ask. For that purpose also, the IRP or RP, they have to prepare. And resolution applicants. Whenever you are going to, once the prospective resolution applicant is finalized, you have to hand over the property to him. You have to hand over the property to him. Once you are going to hand over the property to him, first of all, you should have the knowledge about the liabilities, about the assets. Then only the prospective resolution applicant will believe and he will take. Otherwise, he won't take. So the documentation audit trail is also very important. Suppose the practical latest balance sheet is available 31 March 2023. But CIRP commencement date is after 2 years. So your balance sheet is 2 years back and today, that is CIRP 2025 example. You have to reconstruct bank borrowings. How you will reconstruct? through the sanction letter, through the bank accounts, and sales, how you will reconstruct 2 years. So the base figure is 31/3/2023, and the sales closing balance, how you will arrive from the GST returns. GST returns. Next, receivables. Whatever the base figure you have to take, how the receivables are to be arrived from the data's confirmation. Data's confirmation. If at all you write the letter to all the data's confirmed, means some of the people I have paid. If paid, what is a NEFT or RTGS and inventory estimated via lost gross profit ratio. So the final output is a provisional balance sheet as on 1st April 2025. Like that you have to prepare. Like that you have to prepare. Otherwise, it is very difficult to prepare this one. And the key points. A provisional balance sheet and a CIRP is not just accounting. It is a forensic reconstruction. Because you are investigating each and every asset. What should be the asset value as on date? What should be the liability value as on date? And it is not an accounting. You are reconstructing. You are preparing and built using. For the preparation, ROC filings is one source. It is a starting point. ROC filing. Every company, they will file with a register of companies. And the banks, most reliable. Even ROC filings also 31st March. Suppose in this case, 31st March 2023, they might have uploaded the information with ROC. That is the base figure. And suppose bank loans are there. You are taking 31st March 2023 base bank loans base. Today, how much bank loans means you have to get the information from the banks. What is the latest outstanding? Can I have the account statement? If at all any new loans are taken, can I have the particular sanction letters? If at all the loan is disbursed, what is the agreement? When it was disbursed, and what is the rate of interest you have charged? What are the other expenses you have debited to the account? And based on that only, you have to reconstruct. It is the most reliable one. And particularly to build the data, the GST or tax data is very much. To build the data, particularly the GST and the tax data, the GST returns, monthly they will submit. Through that, you have to build up. Or tax data, particularly income tax data. So, claims and confirmation, once you have given the public announcement, whatever the claims are received, if the claims are received with the proof and confirmation of all these things, and require professional judgment and skepticism. So here you are arriving one conclusion. So this figure may be correct like that. Skepticism and a professional judgment. So that's why provisional balance sheet preparation is a difficult task. It is not only difficult, it is a big challenge also. It is a big challenge also. Suppose you take one case study. IBC Engineering Private Limited. It is under CIRP. Okay. If at all you are appointed as a IRP for this company, in the initial days, you have to prepare the provisional balance sheet. The company, nobody is coming. And the balance, and where the books are available, nobody knows. and the technology is not available. And earlier balance sheets are uploaded in the website. And this is treated as a company, which is a listing company. So in that particular circumstances, how you will build a background of the company. Name of the company, ABC Engineering. Okay. Industry, fabrication and industrial component. Okay. CIRP commencement made 1st April 2025. Okay. Last financial data with the Minister of Corporate Affairs only 2 years back. That is 31st March 2023. Okay. What is the key issues here? To prepare the provisional balance sheet, no updated books are available for 2023-24 or 24-25. And the ERP system non-functional. Some it may be corrupted or it may not be, data is not entered, or the company may discontinue the ERP system. Management non-cooperative. Management is not telling whatever, because I don't know, sir. This is all are to be taken care of by the chief financial officer. We are not involved in that particular process like that. In that particular scenario, how you will prepare the provisional balance sheet? Here, the assets, last available balance sheet. If you see the last available balance sheet, the fixed assets are 15 crores. Inventory, 8 crores. Trade receivables, 12 crores. And cash, 1.5 crores. And loans and advances, 3.5 crores. The total assets as on 31 March 2023 is 40 crores. How you will prepare? So this is with regard to the old balance sheet, that to 31 March. But the insolvency commencement date is 1/4/2025. For the last 2 years, no balance sheet is available. Management is not cooperating. Books are not available. In that particularly 31/3/2023, the liabilities are also mentioned. It is a old balance sheet and available balance sheet. What is the term loan? 10 crores. Working capital loan, that is short-term loans, how much? 8 crores. And trade payables means creditors, how much? 7 crores. And the company has to pay, suppose take for example municipal taxes or some taxes, statutory dues like that. How many? 2 crores. Equity capital and reserves, how much? 30. So the total, only 1 minute, sir. So here, the total balance sheet, that is total assets and liabilities, the 40 crores. And here, the data collection by IRP, multi-sources approach. So the bank data he collected, consortium leader State Bank, term loan outstanding 12.50, they have given, and the CC limit 11 crores, and the interest overdue. This is one source the bank has given. GST returns, the turnover is 30 crores, and the CIRP 18 crores, particularly till date, and the inferences, business is declining, receivables may be overstated, and the claims received on account of public announcement, these claims are received. Financial creditor 25.50, operational creditor 14, and the employees 1.20, statutory authorities 3.30. That is through public announcement only this information received. And physical verification, he has verified with the in the company inventory, he found 5.50 against 8 crores earlier 2 years back. Some mystery is missing and obsolete. These are the data's confirmation. whatever the data says that they confirmed that is 7 crores, but 5 crores not confirmed, doubtful is there. And from the National E-Governance Services Limited, they confirmed debt defaults dates, loan amount aligned with the bank claims. Whatever the bank claim is there, that is matching. There is no problem with regard to financial creditor. Reconstruction adjustment, 31 3 2023 to 2025. The fixed assets opening balance, depreciation 3 crores, missing at 1.5, revised value 10.50, book inventory 5 crores, physical 5.50, adopted value 5.50. Only physical verification I have to take. Book value, trade receivables, book value 12 lakhs, that is 2023. Recoverable, this one 5 crores. Net value is the particularly is recoverable, doubtful, and other things. Net value is 7 crores. And cash, bank balance sheet, bank statement, 0.80 crores. Loans and advances, the recoverable estimated 7 crores. Financial creditors, term loan, working capital, all these things are 25.50. And the operational creditors claims admitted 14 crores, GST that is to be paid 3.3, salaries due 1 point, all these things. Provisional balance sheet, I have prepared based on the available records, based on the available information. I have prepared like this. The total assets 12.80, but liabilities are 44 lakhs. But a shortage amount is there. That is net worth. Net worth means the equity capital should be 8.20, whatever the balance amount is there. So we have to construct this particular one and like this only. Then only it is possible. Okay, this is not a final one, but a subject to changes also happen. So is it okay, sir? Are you getting my point, sir? Hello?
Yes, sir. Yes, sir.
So here it is a big challenge. It is not a small work, and we have to give focus and a lot of discussion, and with the financial experts, we have to prepare this one. This is the base document for valuation purpose. This is a base document for information memoranda. This is a base document for prospective resolution applicants. So again, now today I will close the class. This 1 hour, tomorrow I will continue. Tomorrow first I will complete this one. After that, how to prepare the information memoranda, that we will discuss. Okay, sir? Okay, madam?
Okay, sir. No problem.
Okay, sir. Thank you. Ma'am, shall we log out or should we continue?
So only up to 4 p.m. today.
Hello, ICSI, can you guide us as to what to do?
You're on mute.
Hello, Anjali ma'am. Hello.
Hello, he was to take only up to 4 p.m. today. Tomorrow will be instead of 5:30 for next 2 days.
Yeah, correct. So then we should log
Yeah,
out.
we should log out. It's already 4 p.m.
I was waiting for some ICSI confirmation. That's why.
No, initially only he told, the speaker told that he'll take up to 4 p.m. today.
Correct. Speaker said yeah. But
Yeah.
I can see
And tomorrow he'll compensate by half an hour tomorrow and the after.
ICSI also logged in here. So I thought probably we will hear from them.
No, I think we should log off.
Correct.
अरे यार इसको तो करना था। कोई नहीं आ रहा ना।